Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel and welcome to another edition of Trader Tips. As you already know, the focus of today's video is going to be options and more specifically, options contracts. I promise to do my best to make this one as short and sweet as possible for you guys, okay? So, over the course of this video, I have three primary topics that I want to talk through with you guys. The first of which is what is an option. So we'll go over a very brief description of what an options contract is if you don't happen to be familiar. But hey, even if you are, it's always good to remind yourself, okay? I always like to remind myself of the fundamentals, even this far into my career personally. All right, after that, I want to talk to you guys about how I personally view options trading. Options trading, if you're not familiar, if you're a novice, can come off as very daunting and very intimidating and very complex, which definitely can be, and I don't want to discount the potential complexity of options trading. You have the Greeks, there's so many ways to trade options that can get very complex. But I want to let you guys know that the way I personally view options and trade options, and have honestly made a lot of money trading options over the course of my career, which as far as options are concerned is for almost 5 years now, it's very possible to make a lot of money without having or really expanding, to be honest, your knowledge of options. Okay, it can be pretty simple. You just trade, in my opinion, the way I trade options is just taking advantage of general momentum. If you think a stock is going to go up and you buy an options contract versus just shares of that contract, if you structure the options appropriately, of course, you will make far more money and it will be far more lucrative to trade options contracts as opposed to common shares. And I will expand on that a little more as we go through this list. I'm getting a little ahead of myself, but that is point two. And then to close out the video, I guess not close out the video, but the final point I want to touch on, and point three is going to be my ideal options contract. Okay? Once again, I'll expand on how I view options, why I trade options the way I do, and for my personal style of trading. The way that I've found over the years suits me best personally is most passive. I'm not a very active trader, I want to let you guys know that up front. I'm a fairly passive trader. I identify a macro trend where I believe the fundamentals and technicals are in my favor. In the example that we're going to use today, which is call options, you think something is going to go up. Of course, if you think it's going to go down, it is a put option. Today, we're just going to be focusing on call options for the purpose of this example. It's easier to talk about. It's more digestible for you guys if you're not familiar yet. But if I think a stock is going to go up, okay, and I have a price target for that stock, I've developed through my due diligence a fundamental and technical thesis that leads me to believe that this stock is going to be 10, 20, 30% higher, 50% higher in the next few weeks. I want to talk to you guys about what my ideal contract is. And if you think a stock is going to go up in general, in the short term, of course, not a year from now, but in the short term, what is the ideal contract in my mind, okay? And again, this is not financial advice. I'm just letting you guys know what I personally do as a trader. Always know my money is where my mouth is, okay? And then last but not least, speaking of money where my mouth is, I have a specific contract that I want to share with you guys that I personally think is an amazing contract at this point in time. The specific date of recording is August 16th, 2022. So if you watch this later on, this might not be as relevant, but if you were watching right now, I want to give you something to take away with, and I want to give you something tangible that maybe, if you feel it's right for you, you can do some investing for yourself in this specific contract, okay? So to close out the video, you guys have been waiting for it. It's been a while since I bust this puppy out. I do have the good old iPhone mirrored for you guys on the screen. No, I made $50,000 today. I made $470,000 this week. Those days are over. I don't have nearly that many funds in my Robinhood account anymore. Honestly, I am going to show you guys how to place orders for options contracts for this specific options contract. This SoFi October 21st $9 call on both Robinhood and TD Ameritrade. I've covered this on Robinhood, I think years ago in the early days of the channel for the Wave Sam. But I want to do it again just to remind you guys, and then I'll hop into TD Ameritrade, which for full transparency is by far my primary trading app now. I will say that I like Robinhood's UI or user interface way more. It's a prettier app. It's easier to use. If you're just getting into trading options, I highly recommend using Robinhood if I'm being honest. But for full transparency, I hold the far majority of my capital in, at least invested capital in my options trades and my common shares in my TD Ameritrade account. So I'll show you guys how to buy options on Robinhood, and then I'll hop into TD Ameritrade and show you how to buy those same options, because it can be, it's definitely more, it's less easy on TD Ameritrade, but once you know how, it's all pretty easy, you guys, okay? The hard part is finding the good options, and that's why I want to give you guys this right up front. So that was a little bit of a long intro, a little long-winded, but again, I do feel everything that I'm going to say today is relevant information. Again, this is what I've learned as a trader over the years from my wins and, more importantly, my failures. And there are way more lucrative, I'll say right up front, there are far more lucrative options out there, or contracts out there, than the one that I'm going to say is my favorite one or my ideal one. But it's so important to risk manage, you guys. Right up front, PSA, never buy an option that's 20-30% out of the money that expires at the end of the week, okay? I see way too much of that, and it makes me sick, so please don't do that, you guys. All right, that's the video. Of course, I will give a little plug to the Waves fam at the end of this video, to Waves Capital, if you want to know how I specifically trade options. But that's for the end. Stick around if you're interested in that, if you're interested in how I trade my personal portfolio. This is one of, I believe, 15 or 16, maybe 17, honestly, options plays in my portfolio, in the Waves Capital portfolio at this moment in time. And it's changing every day. It's an exciting market. I'm excited for what the future months have to hold for Waves Cap. But once again, I'll save the real plug for the end of the video. So stick around if you want that. But before we get to reading, also, a like means a lot. If you guys gain value from this, please give the video a like. Subscribe to the channel if you want to join the Waves fam, if you want to level up your investing game, more so your trading game, because we are primarily traders around here. I'm a long-term investor. I have many long-term positions, but options trading is where my heart is. Options trading is what I do on a daily basis. Options trading is how I've made the far majority of my net worth today as a trader, and that's why I really wanted to make this video, and I was excited to sit down and record this one for you guys. And again, I had to actually I bought and re-downloaded this app on my new computer because I wanted to bust this out and really give you guys something to take home. Okay, so all that said, trader tips, options. What is an option? Once again, an options contract, to be more specific. An options contract gives the buyer the opportunity to buy or sell 100 shares of the stock at a predefined price, which is a strike price, at a predefined or predetermined date, which is called the expiration date. Example, I own a contract of Wave stock. This contract has a $100 strike price with a 12/25 or December 25th expiration date. If Wave is $101 on December 25th, then the contract will be worth $1. If it is $99, then the contract will expire worthless. Okay, so it will expire at $1 if it's worth $101. It will expire worthless, zero, goose egg, if it's at $99. Okay, if I want to buy the contract today, I just put 820 because it's round. Once again, it's 816, but 820 just for a round number. If I want to buy the contract today in mid-August and Wave is at $90, then the contract, that December, that Christmas contract, would likely be worth $5 to $10 due to the premium. Now, this is completely speculative, you guys. This is just a rough example, but from all my years of options trading, it's probably be something similar to that, okay? You're paying a premium because over time, options degrade. Options are degrading assets, and that's important to understand. And options trade upon perceived future value, okay? More so, the way I think about it, options trade on perceived volatility. It's important to understand that it's possible, especially in the case that you buy freaking options that expire later this week, for a stock to go up, but an options contract to go down, even significantly down sometimes. Options don't trade on options don't just trade, I should say, on whether a stock goes up or down. Options trade on the volatility at which stocks trade, and more so, the perceived volatility in which investors believe that stock is going to trade, okay? So there is a lot of psychology, there's a lot of game theory A lot of game theory involved with options trading, and that's very important to understand. It's not just, is the stock going to go up or down? It's, is the stock going to pop? Is the stock going to move contrary to popular belief? And is the stock going to surprise people? Okay, that's kind of how you have to think about it. It's not whether it's up or down. Is the stock going to see volatility that isn't necessarily expected by the masses? Okay, and that's kind of just kind of shooting from the hip here, but that's how I think about options. Now let's dive more into it again. Go over how I perceive options, why they're not complex, and then I'll dive into my ideal contract, which you guys can see down here. But again, I'll expand on that as we dive into Robinhood and TD apps. All right. So my ideal option. This is a little preface. This is how I view options. Many view options as a highly complex trading vehicle, which once again, it definitely can be. There are very, very complex ways to trade options. But I simply view options as a form of leveraged trading. If you're right, it will intensify your gains. And if you're wrong, it will intensify your losses. So again, there's a push and pull. Every action, there is an equal and opposite reaction. If I believe SoFi, which is the example we're using today, and I do believe SoFi will see $10, say 1 month from today. Okay? So right up front, why do you say October 21st, $9? I'll explain that later. But SoFi, I think it can see $10. SoFi stock is currently at about $7.50, meaning that it's right there. $10 from here is just over 33% of upside. Okay? If I think SoFi is going to go to $10, I can make way, way, way more money buying options contracts because in theory, you're trading 100 of these shares. Okay? That's why options are far more volatile than common shares. But if I'm right, and once again, this is my job, you guys. I make these videos for you guys every day. I spend the majority of my day writing the newsletter for all of you guys who are part of Waves Capital. I'm spending all day doing due diligence, right? So if I have a fundamental and technical thesis, bull thesis in this case, for SoFi, I think SoFi on every front has reason to move higher up than if I were to buy options, which again are more risky. It's very important to understand. Even these less risky, or these what I perceive to be not very risky options, because that's just what I've learned over the years as a trader, is risk management is so goddamn important. They are still riskier than buying common shares. But if you're right, if you've done the proper due diligence, if you believe in your thesis, then options will provide a far greater return than if you were to just buy SoFi stock or common shares in the stock, okay? And once again, that is because you are theoretically, and I guess objectively, trading 100 shares of said stock, but at that share price, okay? So just an example right off the bat, if, say, I have, once again, a lot of these SoFi calls. I only have 75 in a Robinhood, but again, Robinhood is, I like this app way more as an app. But given the stock's performance, it does suss me out a little bit. It sketches me out a bit. But trust me, I do hold a very, very pretty amount of these SoFi $9 calls. Once again, money where my mouth is. I just want to be transparent with you guys. But SoFi, $9 calls, 10/21 expirations. And this is where my go-to options contract falls into place. And I will talk about, once again, even though I think SoFi could be $10 mid-September, September 16th, I'll go to that right here. So we can go to September 16th as well. Even though I think SoFi could be $10 on September 16th, those contracts are much cheaper because I've learned the hard way in many situations over my many years of trading options. Again, September 16th is still a month out. I know a lot of you don't perceive this as very risky. But you guys, my ideal contract, what I'll just stick with, is a contract that expires 45 to 60 days out, right here at the bottom of this, with a strike price at plus or minus 20%. Once again, minus 20% would be in the case of put options. SoFi, for this example, I think that it will move up. Therefore, I want a contract that's up 20%. So, again, been explaining further, but let me further explain. SoFi, $9 from its current price. $9 is 23% higher than where we're at today. Now, October 21st is over 2 months out, so it's over that 60-day threshold. So this is a very, very solid option in my opinion. And again, given all of the arguments, if you guys are part of the newsletter, you know why I'm so bullish on SoFi. A lot of the names here just give you guys a little hint as to what's in the portfolio right now and what I'm bullish on just for the team. I'm bullish on all of these, and I do think all of these can move up. And I do think SoFi, Matterport, Unity can exceed the price targets that I've set for them in their options. The options I bought for all of these stocks. I think the shares can climb higher than the strike prices I've bought contracts for. And I think they can hit them sooner than the contracts I bought them for as well. But again, you guys, that's where options kill people. That's where options can clean you. Because if something goes wrong, and I've had everything going for a trade before, even pretty sound options, again, going by this rule, and a curveball gets thrown. Again, they offer, Unity is a great example of that. Recently, they offered to acquire, they did acquire a company that tanked the stock, even though everything was going perfectly for the stock. Like all the fundamental technical momentum was there. Curveball, shares tank. Your options, even if they're safer, can decline by 50, 60, 80%. Okay, I think those decline by like 80%. All right? So never buy contracts. This is a PSA once again that expire this Friday. Even next Friday, 2 weeks out is even if you're in the money 2 weeks out, still sketchy, honestly. 45 to 60 days out, plus 20%. You may not get the crazy profits. Again, if I was right, if SoFi is $15 on September 16th, the 9/16 contracts would provide a far greater multiple return than the October 21st contracts. But I'm a swing trader. Again, I establish my positions. I have a thesis. I have a price target. I establish my calls. I let those puppies ride. Let your winners ride. And I sleep better at night, knowing that these are relatively safe calls. Okay, again, still risky, but I've done enough research and I believe in my thesis enough to believe that these are relatively safe for me personally. Okay, so that's that, you guys. Please let me know in the comments down below if you have anything to add. I know that was kind of, again, I was kind of just rambling off right there, but I do feel that most of the information, aside from some of the rambling, was mostly necessary. But if you guys have any tips for your fellow traders, fellow Waves fan members, please drop in the comments down below. And also, before we get into this option that I want to share with you guys and how to buy and sell and whatnot, please let me know, what is your single favorite contract in the market right now? What do you have the biggest bag of? And if, of course, you're willing to share with the Waves fan. Okay? I will say right up front, this is not the single position that I have the most of, but it is up there. Again, there's a lot of plays that I'm really bullish on. I'll do the plug right after this. But again, let's jump into Robinhood. Let's jump into the phone. Let's jump into the charts. Not charts. This is Robinhood app. So Robinhood app, right now, we are at SoFi. What did you do today, SoFi Technology? SoFi was about flat on the day. So that's why I also figured it was a pretty easy thing. It was a pretty easy ticker to just show you guys an example of. So relatively flat on the day. Options were flat. These 1021 options were just stagnant. But $9, 1021 expiration. Okay? Go to SoFi. Sorry, I'm telling you how to trade. So obviously you're on SoFi. You're on SoFi on Robinhood. Whichever stock you want to trade, whichever ticker symbol, whichever company you want to buy, you still hit the trade button. You hit trade options. And then it gives you the list. Obviously, you think it's going up or down. Again, down, it's puts. Up is calls. You go to the very top. You can scroll through the little dates. We want October 21st. So there's October 21st. Right there, $9 call. First call, that's out of the money, which I really like. Again, up 23% from current levels. You just click on it. You see all the stuff that I personally feel is really unnecessary. Again, a lot of traders very successful using the Greeks, using other methods, using covered calls, etc., covered puts, whatever. I don't do that. I establish theses, and I'll explain. I'll make more trader tips videos in the near future about how I view asymmetric risk profile, which means that the upside potential outweighs the downside risk. I'll talk about my 5x5 method, just 5 stocks that you think in 5x, 1 hits, etc. I'll talk about those later, but stay tuned. Anyway, getting off the subject. You're here. This is all the stuff that I don't personally feel is very relevant. You just hit buy. And that's the nice thing about SoFi calls, especially in my opinion, is the fact that they always have very, very tight bid-ask spreads. Okay, so 35 is the bid, ask is 36. You just buy for 36. Obviously, if you're buying like 1,000, there's going to be a small tax you pay for just doing the ask. But if I'm buying a position, I'm expecting this thing to go bonkers. So it doesn't matter if I'm paying an extra cent for a bunch of contracts, all right? So just do the ask. I usually do the ask. Never just do the ask. Never go by what I just said. If the bid ask spread is 5, 10, 15, I've seen some crazy bid ask spreads in the past. So if it's a nice tight bid ask spread, tongue twister, just do the ask. All right, just go for the ask and just get that position established if you believe in your thesis. All right, put 36. Put however many contracts you want to buy. If you want to buy 100. It is going to be $3,600. If you want to buy 1,000, it could be $36K. Hey, you want to buy 10,000? You want to go hard? It's going to be 360 racks. All right. So that is Robinhood. Let's move on to TD Ameritrade. Same thing. Just go to the ticker symbol. I'm sure you all know how to find it. I mean, if you don't, it's obviously the little search button in the top right-hand corner. But then when you're on the ticker you want to trade, SoFi, once again, right here, you hit the little trade button. That's also in the top right-hand corner. Oh, man, it doesn't. I wish I focused better. But top right-hand corner, trade, buy. So whether you're buying puts or calls or puts, you're always going to hit buy, okay? Because we're not buying, we're not obviously not selling anything. So we're buying puts or calls. You always press buy when you buy a contract of any sort. You see stocks right under the ticker symbol, SoFi, stocks. Next to that on the right is options. You click options. Then you only got one option, so you can't go wrong from here. View options chain, hold on options. You see the date. It will always default to the nearest expiration date. Never do these. Never go for the default. That's how free. It's actually kind of whack that TD Ameritrade does that. But you minimize that with the arrow on the right, on the top of the right column. Go down to the date you want to get. October 21st, over 2 months out, over 60 days out. Solid contracts in my opinion. It's a great expiration date to trade short term. If you're short term bullish on something, like if you think something is going to go up. If you're just long, if you're like, oh, I like this stock, I think it's going to go up. Don't buy, like, you have to have a technical thesis, a fundamental thesis that this stock is going to go up in the short term, okay? So this isn't for like, oh, I like the stock, I believe it's going to go up in 5 years. Don't do this if that's your thought. If you think a stock is going to go up this week, within the next 2 weeks, hey, even 3 weeks, this is the contract you want, okay? So I should have said that sooner. I think I kind of said a version of that, but if not, you know now, I guess. All right. So October 21st, once again, you see it right there staring at your face. The column in the middle is the strike price, $9. You see the bid ask. For the calls on the left side, and then on the right side is the puts. So we want to go on the left column because those are the calls once again. Click 36. You can see it goes straight to October 21st, 2022, $9 call for SoFi, $36, 36 cents, I mean. And then same thing, you just put in however many. Let's go, 747. That would be $26,890. Okay, so however many calls you guys want to buy. All right, did my phone freeze? I think the phone fully froze. I'm sorry about that, you guys. I didn't even notice it froze. Man. Well, I mean, I guess you guys get the point. That's all right. We're just going to lock it up there because I'm not re-recording this video, honestly. If you have any questions, I'll be glad to answer them down below. That's whack, honestly, but it's okay. I think the majority of the good stuff in the video is in the first half anyway. You can just go freaking Google how to buy options on TD Ameritrade if you really want to. But I hope you guys enjoyed that video. That was a fun one to make. It was a fun one to prep. And yeah, again, if you guys want to join the winning team, let's minimize this guy. Get this stupid tweak thing out of the way. But if you guys want to join the winning team, if you guys wanted to know, once again, how I personally trade my portfolio on a day-to-day basis. Again, not to copy it. I know the reality is some of you are going to copy it. I encourage highly against that. But learn from my successes. Learn from my failures, because I will fail. Succeed more, but absolutely fail. That's a reality of the game. If you're not ready to lose any money, you can't take the heat. You got to get out of the kitchen. You're not meant for this game. But if you want to learn from my successes, you want to learn from my failures, you want to join the winning team because it's been a freaking amazing month so far, and I'm very confident in the months to come, then join Waves Cap, you guys. It's the first link down below. These are the different pricing plans or payment plans, whatever you want to call them. Completely up to you. You do whatever you will. You can try it free for 7 days. If you don't like it, just unsubscribe. I don't think that's going to be the case, if I'm being completely honest. I think you're going to want to stick around, but try it for free. Just give it a shot. You can always unsubscribe once again. But on top of my entire portfolio, on top of the Waves Cap portfolio, I write 3 newsletters every single trading day. Okay? 2 to 3 at least. I read the macro newsletter a few times a week. Trade Alert is the first newsletter I send out. This is where I rationalize all the trades I made. Next is price targets, where I include all the charts, all the updated daily charts of the stocks, of the ticker symbols that are most relevant to Waves Capital that given day. And lastly is the macro. Again, I do that a few times a week. That's not every day anymore because the markets are so exciting and so many returns are coming to Waves Cap. So I don't really think it's necessary. But macro comes a few times a week where once again we cover the macro environment. All right, that is the video, you guys. Again, I look forward to seeing you guys on the inside. I look forward to seeing you guys in the newsletter. And if you guys are already members of Waves Capital, please let everyone in the comments down below know. Of course, be honest. Don't just kiss ass. But if you have enjoyed your time here, please let everyone know. And once again, share your favorite options contract at this moment in time down below as well. All right. I appreciate you guys watching, and I'll catch you next time. Until then, always remember, take action. Make waves. Peace, team.